Okay, in our first story, the fraud parade continues. Man, whenever a market gets hot, like we see in crypto and in startups and the public markets, when things get overheated and the government's giving away a bunch of free money, then you start to see a lot of corruption and you see a lot of fraud. Today's fraud is the SEC has charged mobile data seller App Annie and their former CEO with securities fraud, and the company will pay a $10 million settlement. Okay, so here from the press release on Tuesday, the SEC announced they were charging App Annie and former CEO co-founder Bertrand Schmidt with securities fraud, and they would be forced to pay $10 million in a settlement. If you don't know about App Annie, they help companies basically optimize their mobile app performance. So you can do things like increase your downloads or maybe move up in the App Store rankings. You give them data, they give you back analytics about your product. And then the concept is they were supposed to be taking all of that data from all of the 8 million apps they claim use the service, like downloads and usage statistics, how many people open it, all that stuff, revenue estimates. And then they would sell that data in an anonymized fashion to traders looking to place bets on this data. So people who do, major trades, of course, buy data from many different sources. You may have heard of this before, where satellite companies were taking pictures of parking lots and giving the parking lot data or maybe port data, how many ships were coming into a port, as a proxy for economic activity, whether it's at a target or a city or a country. And so then you can place a bet on that, which means, any information you can publicly get, that's not insider trading, right? Not exactly. It's just you getting an edge through information. And there's a fine line between what's insider and what's just really clever data to get. You could sit outside of a Tesla dealership, count the number of people going in and out, and do that every day. Or if you happen to be across the street from a Tesla dealership or a Starbucks, what if you put a camera there and you literally counted the number of people coming in and out or built software to do that and then made trades based on it? Seems like a logical thing to do. If you see the number of people coming to a Starbucks every day increase, you might want to increase your bet. Just like counting cards isn't technically illegal in blackjack. If you know there are more face cards in the deck, you can make a strategy on that. But of course, the casino can kick you out. In this case, the casino is the SEC, and they'll look at the rules. So App Annie, not sure exactly what the company's valued at right now, but we found a last investment of $63 million out of $500 or so million valuation, their Series E. But here's what went wrong, according to the SEC press release. App Annie and Schmidt understood that companies would only share their confidential app performance data with App Annie if it promised not to disclose their data to third parties. Okay, so if you were running your app and you were Uber or Twitter or some nascent company, you were Calm or Headspace, whatever it happens to be, you were using App Annie to optimize yours, you would not want third parties to have your data. As a result, App Annie promised their customers that the confidential data would be anonymized and aggregated before being sold to trading firms, according to the SEC release. What does that mean? Okay, we took all the games and we said, these are the number of hours being played on games on iPhones versus Android phones. Here's the number of on-demand companies or ride-sharing companies. But they thought they were all being anonymized. Obviously, they weren't. So contrary to these representations, the order finds that from late 2014 through mid-2018, App Annie used non-aggregated and non-anonymized data to alter its model-generated estimates to make them more valuable to trading firms. According to the release, App Annie knew that their customers were making investment decisions based on their estimates, and they even shared strategies on how the firms could use the estimates to trade ahead of quarterly earnings, according to the SEC release. So here's a quote from the director of SEC's Enforcement Division. Here, App Annie and Schmidt lied to companies about how their confidential data was being used, and then not only sold the manipulated estimates to their trading firm customers, but also encouraged them to trade on those estimates, often touting how closely they correlated with the company's true performance and stock price. In other words, Schmidt was out there telling people, use my data, buy my data, you're going to make more money trading stocks. Is that insider trading? No, it's not information from the company. But in a way, it's sort of like a secondary level of insider trading. It's kind of hard to describe, right? Because people gave that data, but they gave it under the auspices of it being anonymized. So, do insiders have an advantage? Of course they do. Of course they do. Anytime you have a lot of money at stake and in some kind of gambling or trading environment, people will try to get an edge. And some people actually take pride in getting an edge that is illegal or not available, depending on if you want to be charitable or if you want to be super cynical about it. In terms of fraud, this is serious fraud. Is it fraud on the level of Theranos where the service doesn't work and you're basically putting people's lives at risk? No. 10 is Bernie Madoff and Theranos in my mind, like premeditated fraud. I put this, in the 6, 7, 8 range. It's just somebody doing something super unethical and they got busted. And there's no indication here if that person has been banned. But usually there's a ban with these things. Like they would be, oh no, actually there is a ban. App Annie and Schmidt did not admit or deny the findings, but App Annie will pay $10 million, Schmidt will pay $300K, and Schmidt will be prohibited from serving as a director or officer of a public company for 3 years. So I would say that's a speeding ticket more than a real serious action. It's a speeding ticket. I don't know if it's a slap on the wrist. A slap on the wrist would be don't do it again. I would categorize this as, a speeding ticket, which if you own a Ferrari and you get like a serious speeding ticket and you get your license suspended for 3 years, that's kind of painful, right? If they impound the car, this is kind of like you're a Ferrari, you're doing 150 on the streets, they impound the car, you lose your license for 3 years. So it's a serious speeding ticket, serious action. And as I said on CNBC the other day, and I think I said it on This Week in Startups, there's 800 unicorns now. In my estimate, 1 out of 100 companies I invest in or, I meet with. Sometimes, I would say out of the companies I've invested in, 300, I've seen in 1% of the cases, things that would be very concerning to me, maybe not Madoff, Theranos level frauds, but people doing things that I've had to tell them like, that's not a good idea. If you are telling people these are our customers on a slide, let's say, and half of them are your customers and half of them are in your pipeline, you may be exaggerating, but exaggerating when you're selling securities fraud. Giving people data to trade on, now you're getting into securities fraud. So you have to just have a very high moral and ethical compass when you are running a company. I've seen people do things they think are no big deal, like, I'm not going to take a salary, but I'm going to have the company pay for my apartment, and I'm going to have a corporate card that I put all my living expenses on. Like, then you're doing tax evasion. Why is it tax evasion? Because if you were supposed to get a salary, you're supposed to pay income tax. And if you're living and sleeping in your apartment, and you use 1/3 of it as an office and 2/3 for living, well, then you should really be doing 1/3 as an expense against your personal taxes, or maybe the company pays for it. I mean, you just have to talk to a tax accountant and make sure you do these things right. When you're trying to keep the momentum going on an important project, you may need some extra help. Well, Fiverr Business puts a world of expert freelancers at your fingertips so you can get that project across the finish line and be proud of the work. Plus, you'll get everything you need to seamlessly integrate your new team members into your workflow. We love Fiverr here at Launch, and we've hired a bunch of researchers and marketers over the years to help us finish some important projects. One of them we needed to let everybody know in Australia that we're coming with Launch Festival. Boom, I hit the ground running. Now, they have Fiverr for Business. They created Fiverr for Business for folks like us running companies who need to have a VIP concierge level of service. And their team of dedicated business success managers, BSMs, are going to help you find the great talent to join your team. There are no more endless guessing and interviews. Plus, save and share your favorite freelancers for future projects. Find the freelancers you need to give your next project just the boost it needs to finish strong. Right now, you can sign up for Fiverr for Business absolutely free for the first year, 1 year free, and save 10% on your purchase on Fiverr Business with the promo code Jason. Just go to fiverr.com/business and don't forget that promo code Jason. Fiverr is spelled Fiverr.com. Okay? Fiverr.com/business, promo code Jason. Let's get back to this epic episode.